Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here, and this side, Rahul Magan here as the Chief Executive Officer of Treasury Consulting LLP. And today we are going to speak about a very interesting topic on our YouTube channel in the form of the technical analysis, which is dollar index. As you very well understand that there is a lot of movement which is happening in the foreign exchange market, and especially a lot of talks which has been happening about whether Federal Reserve would hike the rate or not. But we are not sure whether they would be in a position to hike the rates or not. At the same time, we need to acknowledge one common fact that your dollar is gaining strength because euro is losing, and Tokyo and because euro is losing, and so as this GBP. So today technical analysis would be covering a very key aspect, which is our flash crash in the GBP. Now what did happen that today morning, because of the failure of the few algorithms by a few computer, the valuation of the GBP has decreased from 1.28, approximately 1.28 to 1.23, which is roughly down by 6 big figures, which is a big number. And of course, if you are a seller, you thought you were a buyer, you thought that GBP would go up right at 1.29 or 1.28, and the value has suddenly decreased to 1.23 because of the algo crash, which is shortly known as algorithm trading. Then you yourself know that that your stop loss is going to get triggered, and you would lose a very handsome amount of money. There is no surety that flash crash would always happen on the negative side. It can always happen on the positive side also. So there is no surety of that flash crash, to be very honest. But nonetheless, what had happened that euro is losing because of the fall in the euro. The euro is losing and the GBP is losing. They are currently facing a lot of stress, to be very honest. So what had happened, the value of the dollar is getting rise and the dollar strength is gaining. I hope you remember, we just few weeks ago the Federal Reserve subject to rise the rates or not. We got to know, rise the rates or not. The value of the dollar was falling down because people lost the hope that dollar would be in a situation to hike the rates or not. But sitting today, dollar is almost at the same place. Like Federal Reserve is very very decisive in nature. They are not sure exactly they would be in a situation to hike the rates or not. But what did happen that the dollar is gaining strength, and it would continue to gain strength because right now there are very top or two or three big news which are forcing dollar to gain strength. So take a simple example. Number one is of course the Deutsche Bank, the banking in the Europe. Now European banking is of course in a mess, not to mention which is Deutsche Bank, Commerce Bank, and your so-called ING. Another which I was looking at the Bloomberg TV today morning is that Deutsche is considering the possible hike in the capital, which would be as equivalent to the total amount of settlements which Department of Justice, which is US Department of Justice, would put forward to Deutsche Bank. And as for the Bloomberg TV, they themselves not sure that exactly where the things would move, with which all instrument the Deutsche would be used pertaining to that. But in my view, I think Deutsche would look for more debt than equity, because I strongly doubt that at $12 per share there would be somebody who would be interested in giving money to Deutsche, right? As simple as that. And they were looking for more debt, and I strongly doubt that Deutsche would consider for COCO, which is contingent capital. We already put up a very good video about the contingent capital on our channel. Deutsche would look for contingent capital. So Deutsche would have only few options, which is either debt or equity, and I doubt that equity would carry a more weight sitting in the minds of an investor today. So euro is of course falling, and as regards the Brexit is concerned, as regards the GBP is concerned, that Brexit is facing a lot of stress, to be very honest, and I strongly doubt that GBP would be able to gather any momentum out of it. To be very honest, GBP would surely be fail, surely will get down. Of course, this time GBP is having a very strong rationale that only because of the flash crash, value has reduced from 1.292 or 1.28 to 1.23. I was looking at the terminal and I got to know that GBP was trading at approximately 1.24 now, so it is getting momentum, which is roughly fine. So dollar would continue to gain strength. Today dollar is trading at 97.04, which is highest. If you carefully see the chart here, then you would got to know that the dollar was almost greater than 100 when it was approximately November 2015, and at that moment it was a big issue for Federal Reserve also that the dollar index should not be greater than 100, but it was so much optimism which was happening around, which led to the increase in rates, and the dollar index went to greater than 100. Today it is trading at 95. As regards the views of the Treasury Consulting is concerned, we strongly hold the view that dollar is not in a situation to stay in the game for longer period of the time. But considering the fact that the nearest competitors like Euro, which is falling because of the German banking, you have GBP, not to mention what's happening in the GBP, and Chinese yuan also. Today I was looking at the Bloomberg TV and I got to know that the Chinese yuan has been reduced. The foreign exchange reserves of the Chinese yuan has been reduced because they are selling a big amount of dollars to maintain their currency. I'm now getting a little skeptical about the Chinese yuan as well, because when Chinese foreign exchange reserves were at 4.5 trillion approximately, I was having the view that they can use a good amount of foreign exchange reserves, but now they are roughly 3 trillion or so. Although such amount of reserves is very high, there is no doubt about that, they are number one in the world. But I strongly feel that considering the fact that People Bank of China is selling a huge amount of dollars in the market as to protect the valuation of the currency, I strongly feel that this not going to work, because the total accumulation net of revaluation which is happening in the Chinese reserves is not as equals to what they are spending right away. So these are the few things that we need to consider in that. And of course, last but not the least, that the upcoming time we are going to face a lot of volatility in the market. The volatility would surely be continue to grow, and in that sense we wanted to show you something right away. Like, we want to make a chart about moving average rolling. We click moving average rolling here, and you can see that the moving average rolling, that it is going up. It means that there is a big probability that the dollar index would go up. We would like to give you one more, which is I think Bollinger Bands. Here we go. You can very well see the Bollinger Bands here. If you carefully see the Bollinger Bands on this the screen which you have, you will get to know that Bollinger Bands, you will get to know about a cloud, about the Bollinger Bands, and you will get to know that this dollar index is moving within the cloud. So if you look at these bands, a Bollinger Band, it's a stochastic measure. Stochastic means a volatility based measure. And if you look at the Bollinger Bands, you will get to know that there is a great probability that dollar would continue to grow in the near term. But Bollinger Bands, if you look at the cloud shape formation, you would get to know about one thing, that dollar index. 1 minute. You would get to know about one thing also, that Bollinger Bands is suggesting this time that the value that the dollar index could go up to 98 here. Now Bollinger Bands are calculated calculated as that you will take a middle band. And what is the middle band? It is a 20-day moving average. Like you can show here that we have taken here 20-day moving average. Then you have an upper band. Upper band is the 20-day simple moving average plus the 20-day standard deviation into 2. Then you have the lower band. So ultimately there are 3 input variables of the Bollinger Bands. Now Bollinger Bands will tell you a range, and if you carefully see that the entire dollar index is maintaining a Bollinger Bands. What I'm going to do, I am going to change this Bollinger Bands. Wait a minute. I am going to change this Bollinger Bands from 20 to I would say 40. Take a simple example. Deviation 1 we are taking 2, deviation 2 we are taking -2, or when we are taking on the close, and here we are changing it to high, and now we are cancelling this. Now if you carefully see that, and here we are changing weight to tick by tick. Now see here, we have taken for tick by tick. Now you will get to know that now the chart has changed, and you will get to know that still the dollar index is within the range of the Bollinger Bands. It clearly suggests that dollar index is moving towards approximately 98 now. Dollar is a buy call, but at the same time we certainly need to show that dollar is okay. Currently it is going to be a buy call, but to be very honest, that there would be any strategic change that can happen in the foreign exchange market, and dollar will bend down from that regards. So this was the purpose of the video, and the objective of the video is to let you know about that how the dollar index is going up. Before winding up this video, we would like to stress two facts again very carefully to all of our readers, that dollar is not gaining. Dollar is gaining only because there is a fall in the valuation of the competitors. So GBP is facing a stiff competition. There is no doubt about that. They are facing the Brexit and everything. On the other hand, your euro, not to mention about euro is also facing a lot of stress pertaining to the fall in the because of the fall in the German banking, that we need to consider. Last but not the least, that Chinese yuan is also facing a lot of stress pertaining to the fall in the valuation of the FX reserves, and also they are trying very hard to sync their currency with the international currencies, although they are a part of the SDR. So with this, we would like to thank you, and Treasury Consulting LLP would again like to stress their view that dollar index is heading towards 98. There is no doubt about that. But at the same time, we need to appreciate the fact that dollar index cannot be sustained over 99, and it had happened multiple times in the history. So all the traders who are dollar bulls now, if you are a dollar bull means you are expecting that dollar to go up, then I think you might earn a good amount of money if it would touch to 99 or something. But again, sitting today, there is a very little probability that dollar will fall down because competitors are not doing well. With this, we thank you very much, and hope you like this video. You know our contact details, which is treasuryconsultingllp@gmail.com, and my mobile number is 9899242978. We thank you for this, and our upcoming videos would also cover about Japanese yen and GBP. Thank you, and have a great day ahead.